I'll start with a chapter here called as Retirement of a Partner. So this is also connected to the reconstruction of a partnership. So reconstruction means the existing partnership will change a bit, but the original business in the same name it will continue. Books of account will continue in the same name. So one such one already we have done with, that is admission of a partner. So this is retirement of a partner. So as per Indian Partnership Act of 1932, section 32 subsection 1, a partner can retire from a firm for various reasons as in the following circumstances: when all remaining partners give their consent, that is everybody agrees for one partner to retire, then it is called as retirement of a partner. The next one is when all the remaining partners either uh, enter into an agreement to express in this connection, fine, one person can retire, it's fine, they can take the permission and retire from the business. Then if it is a partnership at will, that is whenever a partner wants to retire, they can give a notice to all the other partners that I am having an intention to retire from the business, and they can leave the business on a particular date if there is no objection. But there are different situations or reasons for retirement of a partner in a firm. Reasons are many. You can see here around 8 reasons. One is old age of a partner. So due to the old age, the partner is not able to give time, may not be having energy, may not be having interest to continue in the business as a partner. Or maybe due to the bad health, ill health, the person is not able to focus on the business activities. Then other common reason for retirement is the partnership always runs on the trust, understanding among the partners. When such understanding is missing, we call that as misunderstanding with other partners or one of the partner. So one partner thinks of leaving the business or retiring from a business, or a partner will come to know that some of the other partners are doing some illegal activity without his knowledge, so he don't want to be the part of it, illegal activity, so he wants to retire from the business. So unlawful activities done by other partners, so this partner don't want to continue. Then another common reason we find in the business is a partner will retire because the business is incurring losses continuously. That retiring partner don't want to lose some more capital, whatever he has due to losses further. So if he thinks that or she thinks that if I continue to be a part of the business, I may incur more loss. So I want to exit from the business now. So due to the losses, one of the partner thinks of leaving the business. Other one, lunacy of any partner due to ill health, mental imbalance, we call it as lunacy. So mental stability is not there, the person wants to leave, or other partners make that person leave the business. Next, other one is insolvency of any partner. So one of the partner may become insolvent due to his personal deeds not connected to business. So he wants to come out of the business, or other partners will say, please you go out of the business. That is insolvency of any partner. Or some partner may wants to change the place where he resides. So he's leaving that particular town, state, the region. So it is not practically possible for him or her to be the part of the business because of change of place of residence, the home is being shifted. So various reasons for shifting the home. So for that and many other reasons are there. Maybe the one situation we have to look into, and the reason has to be given by the partner, or without giving a reason also the partner may would like to go out of the business. That is always there. So from this we understand that there are many reasons for retirement of a partner. So what is the meaning of retirement of a partner? Let us try to know here today. A partner is said to be retired from a business firm when his relation with the firm as a partner comes to an end. So one partner is there. Suppose three partners are there, A, B, C. A wants to leave the business. So that is his relationship with the firm will go out, firm will be closed. He will go out of the business, but B and C will continue to do the business. So his relation with the firm will end, his relation with other partners will come to an end, but business will continue, but with a new agreement. So existing partnership deed or partnership agreement comes to an end, and in that place, as I told the example, B and C will have a new partnership deed, and they will continue to do the business in the same name, same style. Maybe the terms and conditions, whatever required, they will change and continue. Maybe the profit sharing ratio or connected to operation of financial things, that is connected to bank accounts operations, other related things, they may change and they may continue to do the business. So one partner going out of the business and cutting his relation with the business is called as retirement of a partner. So if retirement of a partner happens, what is the effect of that on the business? Most important thing for you to understand. So here, as I told, three partners are there, A, B, and C. So A retires, B and C will continue the business. So because of A's retirement, B and C will continue. Suppose say A, B, C are partners having equal profit sharing ratio. Equal profit sharing ratio when the three partners are there means 1 by 3, 1 by 3, 1 by 3. We can convert that into percentage as 33.33%. So suppose say A goes out, B and C will continue the business. So B and C also wants to be having the equal partnership. Then B and C will have 1 by 2, 1 by 2, that is 50%, 50%. So B earlier profit sharing ratio was 33.33. C was also having 33.33. Because of retirement of A, B's share will become 50% and C's share of profit also will become 50%. That means from 33.33, B and C's profit sharing ratio will become 50%. That means the profit ratio will increase. So that is called as gain ratio. That means that difference between 50 and 33.33, that is 16.67 or 16.66 percentage, is going to be called as benefit ratio for B and C or gain ratio for B and C. So that is the fundamental thing you have to remember. Whenever retirement happens, there will be a gain for the continuing partners. Continuing means who will continue to do the business are called as continuing partners. The person who is going out of the business will be called as retiring partner. Who retires from the business will be called retiring partner. Who will continue to do the business will be called as continuing partners. Then the new profit sharing ratio may come up between the uh, B and C. Just now I told half, half, that is 50%, 50%. So ratio has changed. New ratio has come up. Earlier it was 1 by 3, now it is 1 by 2. So They may go for a new profit sharing ratio also, depending upon the agreement. So such things will be happening connected to the ratios when the retirement of a partner happens in the business. So meaning I have given there, you can see the gain ratio or benefit ratio of the remaining partners is the ratio in which the remaining partners gain or acquire the share of the retiring partner on his retirement. So continuing partners, another name for them is called remaining partners. So in other words, it is the ratio in which the retiring partners share of profit taken over or benefited by the continuing partners. The question comes, sir, what is the necessity of calculating the gain ratio? Gain ratio is important for calculating the goodwill. Here, who is gaining the more ratio, that is who is getting the benefit? Two partners, as I given in the example B and C, they are supposed to give benefit to A in the form of goodwill. B and C are gaining the profit ratio in the future. For that purpose, they have to give goodwill to A who is retiring therein. So A has also put an effort to make the business reach the best position. So A's contribution of profit will be shared by B and C. So B and C partners has to give goodwill when they're sending A out of the business. So for the reason of sharing the goodwill, the gain ratio is important. So whoever is gaining more profit, that particular partner is supposed to give more goodwill to the retiring partner. So whoever is gaining less is supposed to give less goodwill to the retiring partner. So very important for the retiring partner to get the goodwill here. Now we have only one goodwill treatment. I'll explain that further. So see the difference between sacrifice ratio and gain ratio. Students usually get confused in the examination for that reason. So sacrifice ratio connected to admission of partner, gain ratio is connected to retirement of a partner. The examples, if you remember, you'll be able to understand it very carefully and remember very well in the future. So meaning the ratio in which the old partner sacrificed to the new partner during admission. In the gain ratio, continuing partners is going to give away the goodwill. So they gain profits from the retiring partner because retiring partner is going out of the business. His share is transferred to continuing partners. Then sacrifice ratio is very much required when the goodwill is brought in the form of cash and divided among the old partners. So goodwill is divided in sacrifice ratio there among the old partners. In the retirement of a partner, the continuing partners will have to give away the goodwill to retiring partner in the gain ratio. Based on the formula, sacrifice ratio is old share minus new share. Here, share gained is equal to new share minus old share. Old share will be less, new share will be more in case of retirement of a partner. So, effect when the sacrifice happens, the profit sharing ratio comes down. When the gain happens, the profit sharing ratio of continuing partners or remaining partners will increase. So we'll come to the calculation of gain ratio later. So we have here only one goodwill treatment that I will show you. Only one goodwill treatment you have as per a new method. So I'll explain that. Then coming to the uh, what are the adjustments that has to happen uh, at the time of retirement of a partner? The question comes. The accounts of the business will continue to exist. They are not going to close the books of accounts. So at the time of retirement, certain adjustments become necessary in the books of accounts because reconstitution of the firm will happen. So there, The first thing is every partner will require or will go for revaluation of assets and liabilities of the firm. Whether the gain is there, loss is there, nobody should misunderstand, nobody should fight. So all the partners will agree for revaluing the assets and liabilities. For that, revaluation account is prepared as in the case of admission of a partner, and all the adjustments what we have done in admission, most of the adjustments will be same here also. But revaluation profit or loss, here it is shared among all the partners, including the retiring partner. So I told you the example ABC, whether there is a profit or loss, it has to be shared between A, B, and C. The second one is distribution of reserves, that is reserve fund, general reserve, like that profit and loss account. So all those has to be divided among the partners, all the partners, including the retiring partner. Then profit and loss account, maybe profit, that is which appears on the liability side. It may be a loss which appears on the asset side. So that we call it as undistributed profit or losses. Even that has to be divided among all the partners. They should not continue those P&L account or reserves. When the reconstitution happens of the firm, it has to be closed. Whether reserve fund, general reserve, fluctuating fund, or whatever, or P&L account, profit or loss, it has to be distributed to all the partners because the old profits, it has to be closed. Then comes the goodwill. As I told, only one method is there for goodwill calculation now, as per accounting standard 26. That is, without opening the goodwill account, it has to be done. So continuing partners accounts debited to retiring partner. Retiring partner will gain, and the uh, continuing partners will give the goodwill to retiring partner. So only one journal entry, and that is to be entered in the capital accounts itself, credit side as well as debit side. Next question comes, when the retirement happens, the what about the amount payable by business to the retiring partner? So that is called as settlement of amount due to retiring partner. Remember, the retiring partner's capital will be there, reserves will be there, P&L account will be there, goodwill will be there, revaluation of assets and liabilities will happen. So all these are considered, and finally the amount payable to the retiring partner will be calculated. So his account has to be closed. And if cash is available, if the continuing partners are ready to give away the cash, they will pay to the retiring partner and close the account of retiring partner. If money is not available, then retiring partner will say, okay, you pay me in later. So his account will be converted into loan account. Because he will not be a partner, his account cannot be a partner's capital account, then his account will be transferred to an account called as loan account. In the example which I have told, if it is so, so A's capital account will become A's loan account because A is no more a partner. Maybe combination of these two also may happen. So suppose say 5 lakhs to be paid to A retiring partner, business will have only 1 lakh, so they will pay 1 lakh rupee in cash, 4 lakh rupees in loan. So both may happen, partly in cash and remaining money will be transferred to, payable amount will be transferred to loan account. So that is called settlement of amount due to retiring partner. Then adjustment of continuing partners capital. So this happens when the continuing partners agree upon that profit sharing ratio and the capitals should be in line. It should be same. It should not be having difference. Suppose say equal partner means both of them should have same amount of capital in the business. So one person cannot have more capital, one person cannot have less capital. So if so, adjustments to be done, then the person having less capital has to add more amount and make it equal to other partner, or otherwise ask the person who is having more capital to withdraw the money and make it equal to the person having less capital. The second one will not happen usually. The first one only will happen. So additional money has to be brought in by the person having less capital and add capital to the existing and make it equal. That is called as adjustment of continuing partners capitals. So almost the same. So only thing you have to remember is one, goodwill treatment will be different than admission. Settlement of account will be there. Other than that, revaluation account is same. Goodwill account is only one treatment, and revised balance sheet is also done. That is also going to be same. So here the goodwill treatment, you have only one particular method. So as I told you, that is when goodwill is uh, created and goodwill is uh, adjusted without opening the capital account, without opening a goodwill account. So here D, if goodwill is created to the extent of retiring partner's share and written off immediately without opening the goodwill account, usually that is the one we'll have it in the goodwill treatment. So whatever the retiring partner's share will be there, that amount is created, that amount will be adjusted with continuing partners. Like this it will happen. So this is like a Y is retiring. So Y share is created and written off to other partners X and Z. This will be the only entry you have to remember. Earlier was six different types of goodwill was there. Now only one. So that is easier for you to understand and remember in the examination. This is, if you remember, admission of a partner, retirement of partner is almost the same, 90% is same. Only two entries will be different or three entries will be different. If you know that, so you'll be knowing two particular chapters in a way. So in our examination, you may get retirement as well as the admission. Both the problems may come for the exam because of new model paper which I have shared with you. So easy for you to get through in the examination with